Hello, my name is Andrew Betwain. I'm the editor of InsuranceInvestor.com, and today I am joined on this video by Wendy Walford, Head of Climate Risk at Legal & General. Hello, Wendy. How are you?
Hello, very good, thank you.
Thank you for having us, being here. So Wendy will be speaking at our Insurance Investor Live Europe conference on the 3rd of November in London. She is going to be speaking on a climate panel debate about the rising to the net zero challenges. So very interesting and topical content there. So Wendy, I'm going to dive straight into my first question, which is how does net zero build into the wider climate change goals in insurance investment?
Well, I think it goes back to the Paris Agreement, which is where one of the smaller clauses that was overlooked a little bit neglected, was around the importance of financing to go and support the transition. We really saw at COP26, there was a big push from finance to say, we're going to actually support these objectives and align the financing with net zero objectives. So it's hugely important to support the real world economy as it looks to transition. And I think that's really one of the main goals that comes through. As I work in more of the risk management side, I also think supporting a smooth transition is good because it helps reduce the risks associated with a failed transition where we know the costs of the physical outcomes are potentially quite enormous, and also moving away from the risk of a disruptive transition where you have that big period of volatility as we try and adjust to get the climate outcomes that we want to see. So very much supporting a smooth transition because hopefully that will end up with the best outcomes out of the range of possible scenarios that we do see.
And those possible scenarios are obviously the sort of segue into my next question, which is, can you talk me through the sort of biggest challenges in investment that you see currently for achieving this net zero and this smooth transition?
I think one of the first ones is just the sheer size and scale of the challenge of what net zero means. We saw in last year's report scenario that came out from the IEA looking at what is actually needed to achieve net zero. And whilst we believe it is still possible, it's huge implications for how systems have to change. In addition, it's finding the right type of investments. You still need to have good returns. They still need to meet your risk return requirements. And so I think it's that combination of scaling up unproven technologies, new asset classes when we start to talk about nature-based solutions and what they could look like from an investment perspective. And the moving away from some of the dirty stocks, but also making sure that you're investing in the solutions that are needed.
And we were talking about there about sort of more the abstract concepts there, but I want to move into a sort of more time-scaled, practical conversation. So talk me through what are the key facets in the net zero space that have been covered and occurred in 2022, and what have they changed, and then what will we see next year in 2023?
Well, I think that the main focus in 22 has been on these big commitments have been set in 21 coming up to COP. Actually, now how do you start to deliver on them? What does it mean for the portfolio? How do you move away from the dirtier assets? How do you engage with the investee companies? We've very much taken an approach that for these climate outcomes to be achieved, you need the companies that you're investing in to deliver on the decarbonisation. So by engaging with them and saying, well, what are your transition plans? How are you going to decarbonise? How are you going to achieve net zero so that then we know we're deploying capital into the right companies? So the big focus this year is understanding what transition plans look like, what is a good one, and where do you get the right information to be able to support your investment decisions. I would expect 23 is focusing on actually seeing the results of that, increased disclosures, and being able to use that information to really support which companies you're investing in. We've seen increased focus in moving away from coal and fossil fuels. making sure that those policies are clear and robust, and also reflect the actual available data to investees that can be quite challenging to be able to put through. And of course, building up our understanding of what does trying to move away and rule out deforestation on an investment portfolio. What does that look like? What data do you need to support it? What is available? And building up those policies and implementing them across your investment portfolios.
And I think that goes nicely into my final question for you, which was much more based around what you should be looking out for. How can investment and asset management community, how can it overcome the barriers to net zero, such as underinvestment or bureaucracy in areas such as decarbonisation, where there are huge hurdles?
I think this is the main challenge that we do see, which is the first area that you look to is clean energy and investing in sort of new energy transition, such as wind farms and solar panels, which is now there's a huge amount of pressure on the spreads that are coming through, because everybody wants to invest to support those transitions for quite a mature market. So you have to start looking at actually how can you scale up some of those investments. Now, as a group, we have a separate division that's able to sort of look at supporting and developing those investment assets to be able to scale them and bring them up to that market side. But the bulk of our investments that we manage is for backing our insurance liabilities, our long-term pension liabilities through the pension risk transfer business that we have. And there, our investments need to be very certain and very, very, very certain to come through to be able to meet various regulatory requirements that we have to ensure we can pay out on people's pensions, which restricts quite a lot of the universe of available assets, especially when you're looking at scaling up new and unproven technologies that exist. So there we have quite a dilemma on being able to find the right sources of investments and encouraging it. And that's where we look to use the sort of shareholder capital element through our capital division to be able to invest at an earlier stage to be able to get that growth. So it's by combining the different divisions that we have that hopefully leads to being able to see that investment journey coming across the group as a whole and supporting our business.
So combinations, dilemmas, and all sorts going on there. Brilliant. Thank you very much for those wonderful answers, Wendy, such really detailed. And if you enjoyed what Wendy was talking about and you want to learn more, she will be speaking, as I mentioned, on November the 3rd in London at our Insurance Investor Live conference. So please do go to clearpathanalysis.com for more information and where you can find to register and attend. And I'd like to thank Wendy for her time today. It's been a pleasure to speak to you, Wendy, and I will see you again on our next video. Thank you very much.
Thank you.